Hello viewers, welcome to my channel Profitable Trading. Today I'm going to share an easy setup which is based on the market structure so you can be profitable using the simple method. It's based on the logic of smart money. So we will try to locate where the pending orders are and where the interest is and we make the entries. So just to give you a quick recap on how the uptrend market structure looks like and what is the entry point that we adopt to be consistent, profitable in the trading. Uh, as you can see in this example, market is making higher high and higher high, and you see the price moving in the opposite direction, breaking this pullback, and then moving up with a great momentum. So this is my favorite entry. The reason is this is where the smart money has pushed the price in the opposite direction because they can see your stop losses. They've hit the stop losses and now they are moving in the high momentum. So this is where I feel you can be safe and your investments are good to a very good extent. We understand that market is unpredictable, but stop losses are quite safe, and your probability and your number of trades that you uh, get into profit, right? Your accuracy increases when you get into this entry. So having that background, let's get into this 4-hour chart. I prefer high time frames because this is where you can actually avoid noise and see where actually market is heading to. So in this example, what you see is on the left, a buy trend, right, making higher high. And let's do a small check here, right? Let's do some back testing and try to go in the replay mode here and see how the price reacts. We will try to buy if price breaks this this location. This is the method that we follow and I've been teaching on this channel. So this is the higher low. If price breaks this higher low, we will buy. Okay, it just broke, right? The price broke the higher low. So that means we can expect a buy signal here. Let's wait to see how market reacts. Yes, it's a 4-hour candle, guys, which means if you are making an entry at this point, once the price breaks this higher low, and if you're waiting to see some price bounce, right? This is a 4 hour, so it means the price would have gone miles away. So if you see in the 5 minutes and you want to make entry there, just look for a couple of bounces in 5 minutes, something like this. After this red candle in 4 hour, then switch to lower time frame and wait to see if the price kind of makes these small bounces, showing that it is resuming the uptrend. Okay, in the lower time frame, first you look for this red candle breaking in the 4-hour time frame, this higher low. Then you shift in the 5 minutes or 10 minutes that you like and see if price has started to make this rally slowly, making higher highs. Then you can actually enter the trade. This is the high probability trade, uh, somewhere around here. Okay, and your stop loss will be where the red candle ended, closing of the candle, and you expect the profit to be around the last higher high. This is the minimum profit that you can grab. That is the safe profit level that we can take. So let's try to do a replay and see to what extent the price goes in the buy direction. Okay, price is moving. Yes, you are making profits, but you can see market reversing, right? Something that you might have noticed, at times price reverses. You're always surprised that my strategy fails. No, it doesn't always. But what you need to understand is that market is controlled by the smart money, so they at any point can reverse the direction. So the best thing that you can do and you should always do is to move your stop loss in the direction of your trade. So if your stop loss is here, right? If this is your stop loss that we created, right? We've created a stop loss here. So what you have to do is, as price keeps progressing and giving you profit in your direction, you have to keep moving your stop loss, something like this. Now this is a 4-hour time frame, can have in mind, but if you're looking at 5 minutes, this is a big opportunity, quite big. So you keep moving your stop loss, right? And when market turns back, your order is closed, but you still have made this big profit. Look at this. In gold, it's 2058 to we made profit till 2077. 25 points around, right? Quite a big profit. Now, since the market is changing, we have closed the order, right? The buy order, and we'll see and wait to see how market is reacting. And before we get into the next part, right, let's understand something. So this price movement, right? Take a close look. This price movement from here to here broke the previous pullback or the higher low, which means in this location there is a very strong, a big order, a very big order from the institution, which caused the market to reverse. Okay, so have that in mind. And now, since price is actually moving back again into the sell direction, now this is a second confirmation, which is telling you that there is an order pending here, which got triggered the last time and broke the higher low. And when price is coming back again, their pending orders stay. They don't get executed. When they place big orders, they don't get executed at once. When the price comes the next time, any pending orders in that zone gets triggered. So that is what exactly is happening, and hence our buy trade ended here. So we see a big red candle getting created, which is of the pending order, triggered from the pending order. Now, when you see this red big candle 4 hour, you can go back to a lower time frame, right? You could do that to make an early entry, but start with 4 hour time frame. So what we can ideally do is when this is happening, this is another good entry in short. Now we are changing the direction. You might be surprised that we're trading in both the directions. Yes, when you have the right knowledge and when you know what's happening inside the market and how pending orders are getting released, you definitely can. So after this red candle, you can take an entry and put the stop loss here, because this is where it has turned back down in the downtrend. And now what you can do is target this higher low. This is your next profit level, because this is how the market structure works. If one of the lows on the left is broken, okay, by this down move, okay, which means this whole space is clear for the price to move back and hit the next lower low. It does. That's how the market structure works, and it happens repeatedly. If you do some backtesting, you'll get to know. So now let's try to understand to what extent the price drops. You see that price easily coming down, trying to touch the next higher low. So these are big profits, guys. Since we're looking into a higher time frame, the profits are humongous. Okay, we're almost there. We're almost there. We touched our profit, right? So done. Two entries. We had a buy entry there. When market changed its direction, we got into a sell entry. So if you have this kind of knowledge, you can trade in both the directions, which is really nice to do, but you have to have the right knowledge and understand the levels. You should first mark the higher lows on the left, and if the market structure breaks, this is how you can take the entries. I hope this content was interesting and you like the content and it does help you to improve your trading skills. If you still haven't liked the video, please consider hitting the like button if you like the content, and subscribe to my channel, and hit on the bell icon so you get notification as soon as I add new videos. Please stay connected for such more information and valuable videos. I hope this content did value your time that you've spent. See you in the next video. Until then, goodbye.